Let's do respond to it. Thank you very much. So the Smart Trader's Guide to Identifying Trends. The Smart Trader's Guide to Identifying Trends. The Smart Trader's Guide to Identifying Trends. Can anybody tell me what the trend is in the financial market? Okay, a layman term, trend. What do you understand the trend is? Okay, in a layman's term. You don't need to, if you don't know it about the market, it's fine. Can anyone tell me what a trend is? Be it in the financial markets or a layman's term, we've got you covered. Anybody at all? Direction of movement, or is it direction of movement of price? Okay, I'll take it. Direction of price. Okay, direction of price movement. Okay, I think that's what Onojaki wants to say. Direction of price movement. Anybody else? Anybody else? Anybody else wants to give us what they think a trend is? Remember, I always say something. Nobody is wrong. Nobody is right. We are all giving our perspective. Okay, it's all our perspective. So don't take it to heart if someone says something that is different from what you plan on saying. It's basically that's how things are. That's how things are. So you don't need to take it to heart at all. Okay. So anybody else willing to give us what a trend is in their own way? In their own way, what do you think a trend is? Or in your own way, what do you think a trend is? Okay, nobody else. Great. Now, a trend, direction of price movement, relatively close or very, very close to it. Now, in this session, we'll go through overview. What are trends in the financial markets? Type of trends, how to identify different type of trends, when do trends change, and my final thoughts on trends. Okay, so what are trends in the financial markets? What are trends in the financial markets? A trend refers to the overall direction of a market or an asset class price, okay, or an asset price. Trend refers to the overall direction of a market or an asset price. Let's take, for instance, you are going to an event. The trend is the overall direction you are taking to that event. Do we understand? The trend in that scenario is just the overall direction you are taking, the overall direction you are taking to that event. That means you are leaving your house and going straight to that event. It refers to the tendency of price. Now, this is relative to the financial markets. It refers to the tendency of price to move in a particular direction over a period of time, or over a period, still basically time. Okay? The tendencies for price to move in a particular direction, that is where price is going to over a certain period. That's what basically trends are. Trends can be long term, short term, upward, downward, or even sideways. I know somebody might argue that if we have upward, downward, is it not the same as long or short term? No, not at all. Not at all. I'll break that down. Now, when I say trends can be long term, short term, upward or downward or even sideways, what I mean is how long a trend can last. This is based on long term and short term. Upward, downward, or sideways is basically the direction it is going to last. Okay, success in the financial markets trading is often dependent on your ability as a trader, on your ability to identify trends and position yourself the right way for profitable entry and exits. For profitable entry and exit points, you need to, once you understand the trend, once you understand the trend of a financial instrument, you will be able, I repeat, you will be able to, number one, you will be able to know when to enter a trade and when to exit the trade. You'll be able to know all of these things. Number two, you'll be able to know how much you will make from that trade. Once you understand the concept of trends, once you understand the idea of trends, you'll be able to know these things. And that is what trends are in the financial markets. Types of trends, basically, okay? We have uptrend, downtrend, sideways trend. Now, back to what we said previously. What trends are in the financial market? Let me bring it down to a very, very simple term. We've been seeing or we've been hearing a lot of things about dollar appreciating value against the naira and naira being on the free fall. That is the type of trend. Okay, that's the type of trend. Now I'm talking about trend in real-time scenario. That means everybody's talking about it. Everybody's talking about it. Everybody's talking about it. That's the trend, because basically naira and dollar is a huge frenzy in the in everybody's day-to-day activity. So we're speaking about it to inform ourselves. That's basically what a trend is. That's everybody talking about it in real-time scenario. It's in vogue. It's what is trending. So it's, don't let me use the word trending. It's what is reigning now. Okay, that's how we trend is also in the financial market. Price is going up. We say the trend is in an uptrend because everybody wants to buy. Everybody wants to push price to higher prices. If price is going down, that's what is reigning. Everybody wants to sell financial instruments to make profits from it. That's basically what a trend is in real-time scenario. Now, a trend can be long-term, short-term. You see, some people are using when an iPhone 12 came, it was the biggest thing in the community of phone users. Everybody's talking about an iPhone 12. Nobody's talking about an iPhone 12 today. That means that trend has ended. Everybody's talking about an iPhone 13. So basically, shifting trend will be uptrend to downtrend or downtrend to uptrend. iPhone 12 to iPhone 13 is basically uptrend to correction, then another uptrend. So, types of trend. We have the uptrend, we have the downtrend, we have the sideways trend. Uptrend, direction of the markets is moving up. Could be called bullish market or bullish trend. Okay? When the direction of the markets is moving up, it can be called bullish market or bullish trend. Uptrend, that means it is going up. Uptrend, it is going up. Downtrend is just the opposite of uptrend. When the direction of the market is moving down, it could be called bearish market or bearish trend. Sideways direction, that means the market is literally moving horizontally. Direction of the market is horizontal. Could also be called a ranging market. I know we all understand what a ranging market is. That one is like key. We all understand what a ranging market is. Now, identifying whether the direction of the market is up, down, or sideways as early as possible is important for you as a trader to become profitable. Once you understand the direction of price in its early stage, it's very, very important in you becoming profitable over any trade, on any trade, as it acts as a compass. It will help you navigate. Okay, it will act as a compass for you to skillfully navigate the markets, to navigate the markets the right way, to navigate the right market the right way. Now, if you guys remember on Tuesday when we had our webinar, I said something which was we look at GBP USD from scratch. Okay, we said we look at GBP USD from scratch, and we look at GBP USD from scratch. What was the first thing we did? We took out time to understand the trend of GBP USD. Am I wrong or right? Was that what I did? Please correct me if I'm wrong. Was that what I did on Tuesday? What was the first thing I did? Did I look for the trend first? Yes or no? I looked, because that was the major thing that would help us determine our bias, that would give us a good and proper bias before placing a trade or before capitalizing on that trade itself. That was basically all we did, and we were able to know that GBP USD would sell off. Now, let me show you examples of trends on the charts real quick. Let me show you an example of trends on chart real quick. Um, so I guess we can all see um, the charts. Can you see the charts? Wow, that's brilliant, promise. That's very, very brilliant. Can everybody see my chart? Can you see my charts? Yes or no? Please let me know if you can see my charts, please. Can everyone see my charts? Can everyone see my charts? Okay, great. Now, I'll I'll first draw something. Let me draw something on my charts first. Let me make it very, very clean so we can. Now, I said something previously, which is basically types of trend. We said we have uptrend, price is going up. We said we have downtrend, price is going down. And we said we have sideways trend, price is just moving horizontally. Okay, sideways trend. Now, understanding that these are three types of trend in the financial markets, we are looking to capitalize on any of the above that we see. Any of the above, any one. We are looking to capitalize on it. Now, let me delete this and let's go to a real chart to see it. Understanding that those are the three types of trend that we have in a real chart now. What type of trend is this? Can anyone tell me? What type of trend is this? What type of trend is it? A downtrend. Okay, a downtrend. A downtrend. Brilliant. Glad we can all spot it ourselves. Self. What type of trend is this? An uptrend. Brilliant. Now, I said an uptrend is price literally going up, and I said a downtrend is price going down. Okay. Now, I didn't say price will just be going up, and I didn't say price will just be going down. There are components to a trend. Now, let's go and look for a sideways trend. Let's go and look for a sideways trend. Let me zoom out a bit. What type of trend is this? What type of trend is this? This is a ranging market or a sideways trend, right? Ranging market or sideways trend, right? Brilliant. Now, knowing that this is a sideways trend, we have seen the three types of trend that we literally use in the financial markets. Now, when I was explaining what, let's go back to the slide. Can everybody see the slide now? Can you see the slide now? Can you see the slide now? If you can see the slide, please let me know. Okay, please let me know. Can you see the slide? Yes or no? Let's quickly confirm that. Okay, someone said no. Wow. Someone said no. Someone said yes. Who do I follow? Can you see the slide? I'd like to get more response to know possibly if it's from my end or it's from your end. Okay, great. Everybody said they can see the slide. Not the charts, but the slide. Okay, great. Now, identifying trends. This is where I want to come at. Identifying trends. See, there are many ways or many methods to identify a trend. There are many ways, many methods to identify a trend. Many ways and many methods to identify a trend. Many ways and many methods to identify a trend. See, many trading systems have been developed with precise rules on when to open a trading position, exit a losing trade, and of course, lock potential profits. And all this trading approach, all these trading systems are based, or they were deduced from the structure of a trend. From the structure of a trend. Now, how do you, as a trader, how do you identify your own trend? Now, remember, your trading strategy is still a trading system. Okay, your trading strategy is still a trading system. No issues on that. But now you are using your own eyes to look at it, while some people are using a certain robot or something to look at trends on the chart. Now the question is, how do you, as a trader, now view trends? And I want to correct something. I did not say that. I didn't say that. I didn't say that an uptrend is just going to go up. And I didn't say that a downtrend is just going to go down. And I didn't say a sideways trend will just be sideways. Okay. Now, what I want to correct is the fact that in an uptrend, it is identified with series of higher highs and higher lows. Okay. We identify an uptrend. We identify an uptrend with series of higher highs and higher lows, while it moves in the direction which is up. Now, series of higher highs and series of higher lows is basically this. You guys can see my charts now, right? Let's go back to the uptrend that we marked out. Okay, this is the uptrend that we marked out. This, I'd like us to see it on the 4 hour actually. Okay, let's go back to the 1 hour. I guess everyone can see my charts, right? This is an uptrend. Now we can see that price did not just go up at once. Price went up, came down, went up, came down, went up, came down. Now let me mark it out for you guys to see. Let's mark it out so you guys can see. Price went up here. It started coming down here. Then it went up here. Then it started coming down here. And it went up again here. Came down here. Then went up again. Started coming down here. Then went up again. Came down here. Then went up again. Then this was the highest point it got to. Okay, now every blue area, okay, I marked out is a sequence of higher highs and higher lows. Every blue area I marked out is just a sequence to explain higher highs and higher lows. Every blue area I marked out is a sequence just to explain higher highs and higher lows. Now, this is a low, this is a high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, and this is a higher high. Can you see the sequence in which price used in going up or used to move higher? Can you see the sequence properly? From low to up to low to up to low to up to, like, that is the sequence in which price moves when it is in an uptrend. So do we now understand the sequence in which price moves when it's in an uptrend? Yes or no? Do we now understand the sequence in which price moves when it is in an uptrend? Yes or no? Do we understand the sequence now? Yes or no? Great. Okay. So I'll send out a poll right now. And also other polls, please let's respond to it. Please let's respond to that poll real quick. Let's all respond to the polls real quick. Now, back to what I was saying, which is the sequence in which price moves. We can now see that price basically goes in an uptrend and it has higher highs and higher lows. Now, taking us back to what we discussed previously. I thought I made mention of it here. The direction of the market is moving up. It's always up. Once you've seen a higher high and a higher low formed, just know if a higher high forms, you get an higher low first before a new higher high. Now, in a downtrend is identified with a series of lower highs and lower lows. It forms it every single time it continues to move down. It forms it every single time it continues to move down. That's just how it works. And let me show you on the chart real quick. Going to our downtrend. What do we have right here? We have okay, so this is now, I will now call everybody attention to this. You've attended sessions before, you understand what I want to say. Now, let's relate this to change in market structure. We had a low, we had a high, we had a higher low, we had a higher high, we had a higher low, we had a higher high, we had a higher low, we had a higher high, we had a higher low, we had a higher high, we had a higher low, and we had a higher high. Then what happened here? We had a higher low, right? But after this higher low formed, did we get a higher high? I'd like to get a lot of response. After this higher low here formed, did we have a higher high? Did we get a higher high? No. Okay. So what we had was a what we had here. Let me now delete this. Okay. Let me just use this like this. So what we had was a sign that market structure was shifting. A sign that market structure was shifting right here. Then what? We had a what? Can anybody tell me what this is? A break in market structure. Can anyone tell me? I already said it. Can anyone tell me what this is? Okay. What's this? What happened right here? What happened here? Can anyone tell me what happened here? No. Why did I mark out this line right here? Why did I have this line right here? Can anyone tell me why I have that? I've explained it multiple times. Multiple times. We had what? A break in market structure, then a retest to what? This area of what? That other block right there. Okay, we had a retest to that other block, then we dropped. Okay, so now what I want to explain is actually how this happened, and I've explained it. How we moved from the uptrend to the downtrend. So when we broke this higher low, we can now say that this is a what? This is just a regular high. Okay, this is just a regular high. Then this is a what? Irregular low. Remember, we've shifted from up to trend, up to down. Sorry. Okay, we've shifted from up to down. Okay, yes, Kelechi, it can either be liquidity or BMS, anyone at all. Okay, so now when we shifted from a regular high to regular low, this will now be what? A what? A lower high. Why is this a lower high? Because of this high is higher than this one. This high is greater than this one. Why this one is lower than this? So this is a higher low. Then sorry, this is a lower high. Then this is a lower low. Then this is a lower high. Then this is a lower low. Then this is a lower high. Then this is a lower low. Then this is what? A lower high. Okay, and look at what happened. Okay, I'll save this for another webinar. Okay, so you can see how price moved from an uptrend to a downtrend. I can see the annotations for the downtrend right here, how price reacted, how price moved, how price should be moving. You can see right here how price moved from an uptrend to a downtrend. This is just what it's bound to do every single day, every time, every now and then. This is what price is bound to do, because that's the only way the market will move. That's the only way the market will move, and that's how we as traders capitalize on it. So I believe we understand very, very strong down momentum, very, very strong down momentum. The only thing that can change this down momentum to an up momentum is if DXY decides to just do anything. Now let's go to this, back to this. Sideways trend. It is identified with series of highs and lows that it forms when it moves in direction which is to the side within two certain price points. Now, these two certain price points, I have to zoom out a bit. Wow. Okay. This is our sideways trend here. Okay. And we said it's also called a ranging market. Now, looking at these ranging markets, I believe we can all see. Oh, my I'm not sharing my screen. I forgot. Very sorry. Share my screen now. Can we all see this ranging markets? The one we marked out earlier. Can we all see it? This one right here. Okay. So I put it in a blue color, and I want to show you why they said price trades within two certain points. Now look at this high to this low. Throughout July 22 to August 14th or 15th, price did not trade above or below this box. Price was trading within the range of this box. Let me make it even more interesting. This is the midpoint of the box. The midpoint, the middle of the box. You can see that price didn't trade above or below the box, but price was always trading to the middle point and rejecting or breaking higher, but not breaking outside the controlled price, which is actually the equilibrium, the ranging markets, the sideways market. And you can see price didn't go up or down, it was just moving to the side. And you can notice that it was trading between 0.74220 and 0.732215 until one day and I decided to just go down, break out. Exactly, sweet accumulation. This is where the manipulation happened before the distribution. Sweet stuff. And you can see we had what, just highs and lows. Okay, just highs and lows. These are the lows. These are the highs. These are the lows. We just had highs and lows. Nothing interesting there. Just highs and lows. All we had was just highs and lows. Nothing more than highs and lows that we had. Nothing more than it. Just highs and lows. So that was what we had in the sideways market, and you can see how well it relates to everything that we've marked out. So back to the slide. That's just it on identifying trends. Now, when do trend changes? I already explained when a trend changes here, but I'd like to go into it again. Okay, I'd like to go into it again. For anybody that was not paying attention, please do pay attention. Okay, now the most common way to detecting change in trend is by visual inspection, just by looking at it with our eyes, just by seeing it with our eyes. That's the best way to determine a change in trend, just by looking at it with our eyes and being able to understand that the trend has changed. I should not be doing a certain thing in the market again, or I should be doing a certain thing in the market. It all depends. That's how you visualize a change in trend. An uptrend changing to a downtrend can be spotted by a break in one or more of the consecutive higher bottoms. Okay, the same thing I said, a break in one or more of the consecutive higher bottoms. A break in one or more, okay, of the higher bottoms. When I say higher bottoms, it basically means higher low. And seeing price trading lower, we indicate an uptrend has ended and a downtrend has begun. Let me show you on the charts. Okay, looking at the charts right here, we said we had a what? A low, a high, a higher low, a higher 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 high, then a higher low. We didn't get a new higher high. What happened? We broke this bottom, this higher low. We broke this one also. We broke like 3. Imagine we broke like 3. Then we started trending down. That means we understood that we've left the bullish scenario and we are now in the bearish scenario. That's how you identify an uptrend changing to a downtrend. A downtrend changing to an uptrend is spotted by a break in one or more consecutive lower tops. Okay, it just means lower highs. A break in one or more of those lower highs in the financial market, and seeing price trading higher will indicate a downtrend has ended and an uptrend has begun. Okay, let me show you an example of this on the charts real quick. So this is actually a bearish trend, and this was the last significant lower high right here. Look at what happened at this lower high. What happened? We broke it and we retested it and we started going higher. We started breaking all the old lower highs. So basically, this is how a trend changes from bearish to bullish. Very, very easy. Very, very easy. Now, a sideways trend to any trend. I did not say a sideways trend to an uptrend. I did not say a sideways trend to a downtrend. I said a sideways trend to any trend, to any of the trends. All it needs to do is just to break out above or below to indicate a change in direction. All it needs to do is just to break out above or below to indicate a change in trend direction. That is all it needs to do. That is all it needs to do. Break out above or below to indicate a change in the direction of that financial instrument. If it breaks out above, you know it has changed to an uptrend. If it breaks down below, you know it has changed to a downtrend. So that's what happens. Now look at this right here. Let me show you the charts. What do we have right here? We have what? The ranging market, and we can see what happened. It broke down. A downtrend started, immediately it broke down. Let's go and look for one more. I'm trying to look for one. Okay, let's go to the okay, look at this one right here, this ranging market right here. Price was trading within these 2 points, then it just broke out and started trading higher, giving us an uptrend. So that's just how it happens in the market every single time. Every single time. Now, my final thoughts on identifying trend. The trend is your friend until it ends. The trend is your friend until it ends. The trend is your friend until it ends. This should be one of your mantras. The trend is your friend until it ends. The trend is my friend until it ends. Should actually be one of your mantras, because everybody is a professional when the market is trending. When the market is trending in one direction, but once the direction of the trend changes, we start seeing a lot of professionals now being unprofessional. Knowing the direction of trend does help in taking position. See, it helps a lot in taking position. But bear in mind that markets tend to move in waves. Okay, these waves are called impulsive wave when they are in the direction of a trend, and the corrective wave is when they are contrary to the trend. The corrective wave are when they are contrary to the trends. Now, most people make money from an impulsive wave, and they don't understand how to make money from a corrective wave. You don't want to be that type of person. So by counting the waves or pivots in each wave, you can attempt to anticipate whether a trading opportunity will be against the trend or with the trend. That's basically counting higher highs and higher lows. So this is all that concerns a trend in the financial market, that concerns how to identify a trend in the financial market. And I hope it helped you, and it will help you to better yourself in the financial market. So thank you very much for joining me in today's session. I'm open to questions, taking questions now about today's topic. Please do ask your question. And I sent out a poll. Please let's respond to it. If you've not responded to any of the polls before, please respond to it also. Okay, so I'm open to taking questions. I won't be doing any analysis today to save time. We still have the GBP USD running, so I think that one is a big one there. So I'm open to taking questions. Please do ask your questions. Thank you very much.